Hey everyone, welcome back to my channel. In this video, I'll share with you 6 stocks that I bought in December 2024. As a quick intro for you guys who are new to my channel, I work as a finance manager for a top tech company with an MBA in finance and a CPA designation. Back in March of this year, I decided to challenge myself to invest $2,000 each month into stocks consistently for the foreseeable future. And out of these $2,000, I have to invest $1,000 into undervalued stocks and another $1,000 into dividend stocks. It's been 9 months since I started, and here's how things are going. My undervalued portfolio is up by 30.4%, growing from $9,000 to $11,740, which is pretty awesome. My dividend portfolio, on the other hand, is up by 1.5%, going from $9,000 to $9,132, and it paid me over $100 in dividends so far. And now that makes December my month number 10, and I invested into 6 stocks, 2 undervalued companies, and 4 dividend-paying companies. So let's start with my undervalued picks first and go over them one by one. Undervalued stock number 1, Target. Target is a popular retail giant which is currently valued at about $61 billion. I bought 2 shares of the Target stock at $131.07 for a total investment of $262.14. And after this investment, I now own a total of 3 shares of the Target stock at an average cost of $137.81. Last month, I was also investing into Target and I bought 1 share at around $151. But the price suddenly went down after my initial investment, which is why I decided to buy even more shares to lower my average cost per share. Target stock has had a tough time recently due to slower retail sales and a growing competition. But honestly, I see it more as a buying opportunity rather than a concern. One of the things that really stands out to me about Target is its strong connection to its customers, especially the female shoppers. Target has built a reputation as a go-to destination for everything from stylish home goods to affordable fashion and family essentials. And when I looked at Target's stock price history, it gave me even more confidence. Over the past 5 years, Target's share price has ranged between $92 and $261. So at $131, I feel like I'm getting it at a significant discount. Wall Street analysts seem to agree, with many of them setting a 12-month price forecast for Target at an average price of $145. That's a 10% potential upside from where I bought it at $131. And on top of that, Target offers a solid dividend yield of over 3%, which means that I could have invested into Target even as part of my dividend stock portfolio. Undervalued stock number 2, Alphabet. Alphabet, the parent company of Google and YouTube, is a tech giant that practically dominates the entire internet. At the time of this video, Alphabet is valued at a staggering $2.3 trillion. So I had $776 left to invest in my undervalued stock portfolio, and I ended up investing it all into Alphabet, which got me 4.6 shares of their stock at an average cost of $168.19. What I like about Alphabet, as you probably know, is how diverse the company is. It's a huge ecosystem that includes Google Search, YouTube, Android, Google Cloud, and many other businesses, all of which are still growing. And since I've started making YouTube videos this year, it kind of makes sense for me to also invest into the company that actually owns the platform. And even though Alphabet stock has performed well over the years, I still think it's undervalued at $168 given the company's strong growth prospects. Wall Street analysts are very optimistic too, with an average 12-month price target of $210. That's about a 25% upside from where I bought it. And let's talk about competition for a second. When ChatGPT first came out, you probably heard people say that it would be the end of Google. But as you know, Google did not panic too much. Instead, they introduced their own AI tools, which made Google a lot smarter and the search experience a lot easier. And now, whenever you search for something on Google, you often see an AI-powered response right at the top, saving you a lot of time from having to click through a bunch of different website links. And all of these reasons made me want to invest into Alphabet before the end of the year. So now we discussed how I spent my $1,000 budget on undervalued stocks. Next, let's move to dividend stocks where I spent another $1,000. Dividend stock number 1, PepsiCo. As you probably know, PepsiCo is a huge player in the food and beverage industry And it's way more than just the Pepsi drink. They own iconic brands like Lay's, Gatorade, Tropicana, Cheetos, Mountain Dew, and many others. At the time of this video, PepsiCo is valued at $216 billion. I bought 3 shares of the PepsiCo stock at $162.71 per share for a total investment of $488.13. And as of today, I now own a total of 4 shares of PepsiCo at an average price of $162.98. PepsiCo as a company is a dividend king, meaning they've not only paid dividends, but also increased them throughout the company's history. And as of today, PepsiCo has a dividend yield of 3.4%, which means that the company will pay me $3.40 every year for every $100 I have invested in their stock. I'll be honest, PepsiCo is not one of the cool or flashy stocks that everyone tries to invest in, but it's a very hard stock to beat if you're looking for consistent income and reliability. What I really like about PepsiCo as a company is how they've stayed relevant over the years. As people's tastes have shifted over time, PepsiCo kept up with the trends by offering healthier snacks and drinks while still owning the soda game. It's that kind of adaptability which makes them such a solid pick for my dividend stock portfolio. Dividend stock number 2, Mondelez International. If you've ever had an Oreo or Ritz crackers, then you're already familiar with Mondelez. They're a global snack powerhouse with products loved in over 150 countries. At the time of this video, Mondelez is valued at around $82 billion. I bought 4 shares of Mondelez at an average price of $65.17 per share for a total investment of $260.68. After this purchase, I now have 7 shares of Mondelez at an average price of $65.76. One thing that caught my eye about Mondelez as a company is their strong focus on snacking. And let's face it, people don't stop snacking no matter what is happening with the economy. That, in my mind, makes Mondelez as a company to have a super resilient business. From an investor's perspective, Mondelez is a solid dividend stock. Their dividend yield is over 3%, which means that I'll make more than $3 each year for every $100 I invest into their stocks. Given their iconic brands and global presence, I don't think the company will ever go bankrupt, and they'll be paying me dividends for life. Dividend stock number 3, Kraft Heinz. This company is most well known for their Kraft mac and cheese and Heinz ketchup products. At the time of this video, Kraft Heinz is valued at around $38 billion. I bought 8 shares of the Kraft Heinz stock at $31.98 per share for a total investment of $255.84. With this purchase, I now own 26 shares of their stock at an average price of $33.22. Kraft Heinz has a massive dividend yield of over 5%, which provides us investors with a massive income potential. And you probably know by now that I like to invest in companies whose products I personally use myself as a customer. And I personally like their Kraft mac and cheese and Heinz ketchup, and if I buy their products, that makes me more comfortable to invest in the company as well. So overall, Kraft Heinz is a great addition to my dividend stock portfolio as it has a high yield, a steady business, and great products. And dividend stock number 4, UPS. UPS is one of the largest delivery companies in the world. At the time of this video, UPS is valued at $109 billion. I bought 2 shares of the UPS stock at $125.74 per share for a total investment of $251.47. And after this purchase, I now have 12 shares of their stock at an average price of $132.88. UPS also has a massive dividend yield of over 5%, which means that the company will pay me over $5 each year for every $100 I have invested in their stock. What I like about UPS is their importance in all of our daily lives. With the rise of e-commerce, deliveries are only increasing, and UPS is a key player in that space. Plus, I've personally used their services many times, which makes me more confident to invest in their business. So overall, for my December 2024 stock picks, I ended up investing $2,294.49 across 6 different companies. 2 of the companies are part of my undervalued stock portfolio, and the other 4 are part of my dividend stock portfolio. Each month, I also keep you updated on how my stock accounts are performing, so make sure to check out those videos as well. Thank you for watching this video, and I'll see you in the next one.